Now, if you haven't heard, Donald Trump is moving forward with his plan in order to abolish the IRS. Now, as wonderful as that sounds, because many of us do not want to spend extra money, especially in taxes, this is going to cause a major ripple effect. Now, there's going to be some pros and some cons to abolishing the IRS, believe it or not. And one of them is going to be with the banking system. So if you ever went for a home loan or a loan lately, many of these banks are asking for your tax returns. Even for credit cards, they want to see your tax transcripts because with the high cost of inflation, many Americans are living off of their credit cards and have racked up extra debt because their income is not staying pace with the inflation and the rising cost of products. So we're going to break down in this video what are these changes that Donald Trump want to implement to eliminate the IRS, and what effects is it going to have on you, especially when it comes down to you getting credit because banks are judging your tax returns to align up how much income you actually make. And so this can affect you getting approved for loans moving forward. And we're going to break that down in this video. Now, if you like this kind of credit information, make sure you subscribe to this channel. And if you go to my website, you can get this free heart inquiry removal package for free. The link is in the description of the video and in the pinned comment section. In this article by the New York Post, Trump wants to abolish the IRS after tariff revenues make a whole economy explode. New Commerce Secretary Howard Lutnick reveals. One of President Donald Trump objective over the next 4 years is to have the U.S. revenues from tariffs become so massive that the Internal Revenue Service is no longer needed. His Commerce Secretary revealed Wednesday. His goal is to abolish the Internal Revenue Service and let all outsiders pay, Commerce Secretary Howard Lutnick said during an appearance on Fox News Channel with Jesse Waters' Prime Time. Former CEO of Wall Street firm Cantor Fitzgerald explained a day later on his belief that Trump's sweeping tariff plan will be a boom for the U.S. economy. As the president said, reciprocal tariffs, either you bring yours down or we're going to bring ours up. If we go to their level, it will earn us $700 billion a year to be equal to everyone else, Lutnick said Thursday during an appearance on FNCS, Americans Newsroom. And there goes our deflect. And interest rates come slashing down and the whole economy explodes higher. We've got the power. We got to use tariffs. We've got to use the Internal Revenue Service to take care of Americans and cut the scams and the abuse, the waste. And let's make America great again, Lutnick told Waters. We mean great by saying no deflect and basically trying to eliminate the Internal Revenue Service and our taxes. He added, cut taxes, try to get them down because we're great and we collect the money. Now, we all have to admit there's times in our life where we really dread doing our taxes, and getting rid of the IRS sounds pretty awesome because all of us do not want to pay taxes if we don't have to. But let's examine the pros and cons of the situation. Let's look at the pros first. Now, some of the potential positive effects. Number one, simplification of tax filing. Some proponents argue that abolishing the IRS or replacing the income tax system can lead to a simple tax code with fewer forms and less red tape. If people aren't required to file complex income tax returns, that could save time, reduce stress, and lower costs for tax preparation. With fewer complex burdens, small business owners or creators might find it easy to focus on their work rather than tax paperwork. Number two, potential incentives for work, savings, and investment. Some analysts suggest that shifting away from income tax towards consumption tax or other forms may increase incentives to earn, save, and invest instead of paying high taxes on income. For entrepreneurs, there may be a perceived benefit, more reward for creative effort if tax on income are reduced or simplified. Three, reduce power of a large federal tax agency, as seen by critics. Some people believe the IRS has too much power or that the tax system is overly burdensome. Abolishing or reducing it could be seen as reducing government intrusion. This might resonate with everyday citizens who feel frustrated by audits, complexity, or fear of mistakes. Now, all of that sounds wonderful. And me, myself personally, as a business owner and a landlord, I would love a break in my tax burdens because my tax burdens is really high. I'm not going to lie to you. But there are negatives that can come out of the situation. So let's examine those. Now, here's some potential negative effects. Number one, high taxes on consumption or goods. If the income tax system is replaced rather than simply eliminated with something like a national sales tax or heavier tariffs on imports, everyday Americans can face high costs when buying goods or services. For example, one analyst found that replacing income tax with tariffs could result in a net after tax income loss of about 5% for middle class earners. That means while you might pay less in income tax, you might spend more in everyday purchases, which can hit lower and middle income household hard. Number two, loss of certain tax credit or benefits linked to income tax. If the income tax is eliminated, many of the provisions tied to it, like certain credit, deductions, or services, may disappear or be changed. For example, the elimination of income tax could mean the end of child tax credits or health insurance premium tax credits. That could reduce support for families, especially those who rely on those credits. Number three, revenue and government service risk. The federal government currently depends heavy on income tax for revenue. Replacing the system could be a massive undertaking. Some analysts warn the transition could cause revenue shortfalls or instability. If revenues drop or the new system doesn't work as intended, funding for national service, defense, infrastructure, social programs could suffer. Four, regressive effect. Burden shift to lower and middle income. Consumption tax and tariffs tend to be regressive unless well offset by rebates or exemptions, meaning they take a large portion of income from those with less. Some analysts of the proposed national sales tax, i.e., the fair tax, suggesting the burden could increase for many in the middle income tax bracket while decreasing for the wealthy. Everyday Americans might pay more proportionally than higher income under certain models. Five, transitioning and uncertainty costs. Changing a system this large involve transition risk. Jobs in tax preparation, auditing, etc. might be disrupted. People would face uncertainty during the transition, new rules, new forms, potential gaps in coverages or protections that exist today. Now, those are some of my concerns. Is it going to shift the burden to middle income and lower income people and also the cost of uncertainty? Always remember, with uncertainty, businesses hike up the cost because they can't really project what's the profits. So in order to be in business, you need to know how much profit you're going to make in order to stay in business. So this even leads us to the credit implications. When it goes out for loans, many of times what you're going to see right now in the economy and uncertainty, you're seeing a lot of banks wanting to see, even for credit cards, your tax transcripts to verify your income. You definitely need your tax returns and all of that in order to get a home loan. They want to see this information. Now, with the disruption of removing that system, how are banks going to qualify your income? What means can they judge the risk on lending to you? Now, one of the biggest implications this might have is on credit reporting. Now, recently, down through the years, you have seen tax liens removed off of credit reports. Now, with these outstanding ways that the bureaus have already adjusted, is it going to adjust differently now with this system? Is it going to be more record keeping on your income, especially for those on public records, to try to pin down where you stand on your income and your obligations? And this can wind out with how are they judging? Can you afford what you're borrowing? Because if taxation is higher on the goods that you're buying, then you're going to see less disposable income. And how can the banks judge that? So this may lead to more scrutiny and underwriting. And now we are seeing, maybe this is why the Trump administration is really pushing the AI instead of the credit bureaus actually being the way to judge for lending, because with these AI technological means that's being implicated in the credit system, like Chase now going with Nova Credit as underwriting, not just judging you off of your credit scores, they're going to focus largely on your income. Also, with Plaid rollout of their system, it judges your income and how much is you're depositing in your bank accounts. Now, one of the biggest changes that might come down heavy if the IRS is removed is the heavy scrutiny of your bank accounts and your income. So that may really open you up on really with banks wanting to see more financial banking details of your bank accounts. So you want to position yourself to start making sure that you're streamlining and running money through your bank accounts as much as possible, because even right now, that hinges on a lot of approvals, especially since inflation hit. This is why the banks are really focusing on your tax returns, because many people already, because of the shift of a high inflation, a lot of money printing, and now with these tariffs, the cost of living is going up for the average American. And they want to see, do you have the income to afford whatever you're borrowing from? And a lot of that is going to go into your housing costs. Can you afford a home with what you are paying out in this type of economy? Which is why they're demanding, even for credit cards, proof of your tax returns and tax transcripts. They just don't want to take your word for it. So with that being removed, they're going to want to scrutinize your bank accounts. And are you depositing and receiving the money in your income that you're saying? So that may put a lot more people in the spotlight when it comes to lending. And that's going to be a huge shakeup. So you may want to focus on generating extra income in your life, so you moving forward in this new economy can be able to get approved for loans. And you want to work in partnership with your children, your family, whoever, your partner or your spouse, because you may need that extra income moving forward to get approved for these loans, especially with the IRS being removed, and you can prove out your income tax. And that's a means of proving your annual income. You may want to get joint accounts with your spouses and make sure you're running money through your accounts together. And especially with Plaid, that's already in effect, to look at income coming through your bank accounts, you may want to make sure you're working together with group economics. So hopefully this information was helpful. If you have any questions or comments, leave it in the comments section. But if you have more detailed questions for me, you can go to my website and all your questions go directly to my cell phone. I hope to see you guys in the next video. Stay tuned.